Hello, everyone, and thank you for joining us on this Wednesday. And welcome to the Specialist Trading educational presentation. Now, today I'd like to talk to you about a powerful trading strategy built for short-term setups. And the reason why I want to talk to you about this today is because of the volatility that's returned back into the market. Remember, for a good portion of the summer, we were just slowly creeping upwards, inch by inch. There really wasn't a lot of movement in the markets. And all of a sudden, just last week or so, we started to really increase that volatility. Hello, everyone. I'm sorry I had a little bit of trouble there with my microphone. I hope you can hear me right now. But welcome to this educational presentation. I'll start over again. I hope you're all here with me today and can hear me all right. In fact, just to make sure that our equipment is working correctly, if you could just go to your question and answer section and type in yes if you can hear me or not. As I stated earlier, we had just a little bit of minor technical issues, and so now we should be right back together again. Okay, great. Seems like everyone's able to hear me on board now. Why don't I start over again by welcoming you once again. And today, this educational presentation, I want to talk to you about a powerful trading strategy built specifically for short-term setups. And the reason is because if you remember at the beginning of the summer and well into the summer, we were pretty much just kind of going slightly upwards, steadily upwards with very little volatility. And then in the last couple of weeks, we started a pretty strong downward move. Okay, the volatility increased. So a lot of students are saying, well, listen, should I stay in for the long haul or maybe should I get in and out of these short-term trades so that I'm not exposed overnight or holding on to positions too long? Perhaps the trend will change rather quickly. Well, let's look at this example here. This is an example in WDAY or World Day, WDAY. A lot of traders would look at this and say, well, not really much happening here. In fact, there's major institutional selling going on because I took that course. It cost me $10,000, but it really has a good indicator that tells me where the institutions are either buying or selling, and they all seem to be selling right here. So why should I buck the trend? These guys, after all, know what they're doing, right? They have all the big bucks behind them. So let's say you decide to sell and you hold a position thinking that you're going to have a really nice short trade here. And then this happens, right? So you're exposed by holding the short position overnight and you say to yourself, wow, why did I do that? All of a sudden things kind of change. When I thought we were going negatively, now we're going back to strongly upward again. Well, with today's presentation, I want to share with you how a new strategy actually would not have sold here at all. In fact, 2 days before you thought maybe that the institutions were selling, it was actually generating a buy signal. So that potentially on this short-term setup, you could have taken advantage of 55 points in just 1 week. Now, if you're not the type of trader who likes to, look at technical analysis and follow rules, you kind of really just like to throw caution to the wind and just go with the flow. Well, we developed the PTS Primo charting platform. This is the educational platform that teaches you how to identify and trade these short-term signals. So if it's kind of out of your realm, if you've never traded this way before, don't worry. We've made it simple for you. I developed this platform with Pro Trader strategies so that everything is right there in front of you, one click away. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. About 11 years ago, I teamed up with Pro Trader strategies with just one goal in mind. It's a little bit different from other webinars you may have attended, but our only goal was simply to educate traders. All right? We're not here to tell you that we have the best system that never fails or that we know exactly what the market's going to do. We know exactly how high or how low it'll go and where it will stop, or that I know the perfect market or the perfect time frame for you to trade. I mean, this couldn't be any further from the truth and the reasons why we developed our companies. The reason we developed them is because most traders love to take their cue or their answers or decision-making process from someone or something else. All right, think of it. How do you make your own decisions when you trade? Most likely, you're like most people, you go to a chat room or you listen to the guys on TV, or you go to a daily blog or a weekly blog, or maybe you wait for the earnings to come out. But either way you spin it, you are making your decisions based off of what someone or something else is doing. Now, I know this for a fact because this is the way I used to trade. I first started trading 43 years ago, and my career started on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So I used to make markets in about 50 or 60 stocks. But trust me, I did the same thing. I was looking at all the news, listening to all the so-called trading gurus. I was waiting with bated breath for all the indicators to cross over or all the employment numbers to come out. And I couldn't make a dime doing all of those things that most likely you're doing right now. It wasn't until I was lucky enough to have some mentors that were specialists themselves on the floor that had about 40 or 50 years experience behind them that taught me all the things that I teach my students around the world. And that's basically to simplify your trading, but ultimately to make your own trading decisions. Because see, as traders, we fall into that trap of thinking, well, someone else must know what they're doing, so I'll just blindly follow along. But really, that's a recipe for disaster. If there's one thing I've learned in 43 years of trading, that really is a recipe for disaster. Because if the entire industry is based upon you joining some website or buying some product and someone's supposed to tell you what to buy or sell on a nightly basis, why is it that 80 to 85% of all traders fail? Simply, that doesn't work. That's why. So the only way you can become a consistent trader that I've found out in my career is through making your own trading decisions. And the only way you can make your qualified trading decisions is by being educated by someone who knows what works in terms of consistency and what doesn't. So that's the gap we fill. That's the service we provide. We teach you all of these things that I've accumulated in my 43 years, all the things that have worked through the course of time, and we don't teach you the things that haven't worked, such as support and resistance, such as Fibonacci ranges, such as institutional buying and selling, such as volume. Trust me, I traded with those things 43 years ago. They didn't work then, and they're not about to start working now. Most of the things I teach are extremely simple. In fact, this very strategy I'm going to be talking about today only has 2 rules. That's how simple it is, but it really is powerful. So that's what we teach. That's our goal at Specialist Trading, simply to educate you as traders. So ultimately, you can be in charge of your own trading destiny, not someone else, and not some guy in a chat room, not some guy on TV, or not some convoluted indicator, but you alone will be able to make your own trading decisions. So that's what we provide at Specialist Trading and Pro Trader Strategies. And you'll see that attention to detail we give in trying to show you how simple it can be in today's presentation. But as always, before we begin, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of trade examples. Most of these happened just about in the last couple of weeks to a month from this present date. So I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view the disclaimer, once again, if you haven't done so already, please feel free to follow us on Twitter, okay? I'll give you that our handle at the very end of the presentation. And so if you want to follow us, there's a lot of great free information. As you can see here, my goal is to simply to teach you how to trade with the specialist edge. And one of the ways we do that is through our Twitter page. Okay, so there's lots of great free educational information, anywhere from signals our strategies have generated to little bits of financial wisdom I've accumulated along the way. So please feel free to follow us on Twitter. Now, as I stated before, we are first and foremost an educational company. So what does that mean? Well, that means this is going to be conducted like a class, but please remember, since this is a class, I do want you to ask me as many questions as possible, but I would also like for you to wait at the very end. I have a lot of slides to share with you. So if we wait for every slide to ask a question and we go over all the questions, we'll be here far too long. So what I'd like to do is please wait till the very end of today's class to ask any questions. The only question I will answer is just this one, and that is this being recorded? Yes, it is. We record each and every one of our presentations. So if you have to leave early, or if you're having technical issues, like such as we had prior to the beginning, don't worry, we'll send each and every one of you a link to this recording. Okay, with that stated, let us begin today's educational presentation. And what we're going to be talking about today is strategy number 10. Now, this is a relatively new strategy, and one of the things that separates it from all the other things is through the highlights. So let's talk about some of the highlights of this particular method. First of all, it's an entirely new short-term strategy. Why is it so different from all the other methods we have? Well, because usually what we'll do is base our strategies off of tools, indicators, or patterns that have to take into place all the overall trend, okay? This is entirely based on short-term requirements. We're not looking at the overall trend. We're not looking at the trend that was maybe lasting for the last 2 to even 3 months. We're looking at what has happened in the past week. So it does not apply the buy-sell line to determine the trend. If you followed any of my webinars or you're a member of our courses, you know that we always use the buy-sell line. That's our tool to determine whether we should be buying or selling in the overall trend. Well, we're not even going to use that in this. We're not even determining the trend through that. We're still going to determine the trend, but use something entirely different. Now, usually with our methods or strategies, we base them either off of an indicator or a pattern. Well, in this particular method, we're combining the two. This is different from anything else we've ever done before as well. We're combining an indicator-based as well as a pattern recognition strategy together. Now, most of the trades that strategy number 10 generates are designed to last anywhere from 1 to 3 weeks. Some are shorter, some could be longer, but that's pretty much the benchmark, 1 to 3 weeks. Because of this short-term time frame, it makes it perfect for option timing. So if you're an option trader, you can decide to use this strategy to get in and get out. Okay. Now remember, this is not an option strategy. We are just, with all of our methods and strategies, all we're doing is highlighting a high probability entry, either to buy or either to sell. How you choose to get into the trade, either through buying the stock, buying the future, buying the option or a spread, is entirely up to you. Remember, you're in charge. So I always get these questions from potential students that say, well, Steve, which option would you recommend me to buy for this particular method? Do I go out or should I do a spread? Remember, that's up to you. This is not an option course. As educators, we're pointing the way of a high probability area for entry. How you decide to enter it, once again, is up to you. I know it's a little bit foreign for a lot of you. You want to be told what to do, but that goes against our philosophy. Now, we have both aggressive and conservative versions. So if you're an aggressive trader, you may want to trade that version. If you're more conservative, like less risk, you may want to trade this version. Both of these are taught in our course. Now, a lot of people say, well, Steve, I'm not a short-term investor. I came here today thinking that, maybe, I could learn something, but I'm more of a swing trader. I'm even inclined to be an investor. Well, that's okay. A lot of times when things get a little questionable about which direction you think the market's going to be going, this is a perfect method to apply as a hedge. So let's say you're long a lot of stocks or a lot of portfolio positions in your long-term account. You can use this to offset as a hedge to maybe look for the opposite, for shorting opportunities that come into play. Now, lastly, all of our methods are extremely consistent. What does that mean? I know most students of ours, when they first come on board, think, well, Steve, you said your stuff is really consistent, so that means you have a high level of winners, right? No, that's not what consistency means. Consistency means that you are aware. There is an awareness that you will have losses from time to time, and that's perfectly admissible. That's okay. In fact, that's natural, okay? What is not admissible is a method that makes a string of losses and continues to generate losses after losses, okay? A consistent method is one that is aware that you will have losses, but is able to recoup those, oftentimes on the very next trade. I'll show you a couple of those examples today. So consistency does not mean that, wow, you have 90% winners and just 10% losses, and they're very small. No, that's not a consistent method. The consistent method is one that's able to recoup those losses, okay? See, we're not looking for a home run here. Even though that may happen from time to time, that's not our goal, all right? So many strategies, so many educators, so-called educators you see on the internet, they'll say, this stuff has never lost. I mean, in the last 10 years, we've only had 1 or 2 losses. Well, it's been my experience that claims like that usually do have some really nice home runs, but then they usually give it all back on the very next trade. And that's not what we're looking for. You see, a consistent method is a 2-step forward, 1-step back approach, not 1 step forward, 5 steps back, okay? So that's not what we're looking for. We want consistency because consistency is what will sustain you. Consistency is what will enable you to be trading 20, 30, 40 years down the road. We don't just want to have you have a series of good trades and then you give it all back and then you're wiped out a year later. We want you to be trading 20, 30, 40 years down the road with our methods. Okay, so let's look at the process because once again, I'm sorry, this is one of the few presentations where I can't give you a few of the rules. If you've come to my webinars before and you see me talk about other methods, strategy number 4, strategy number 5, I've often gone over just and given you a couple of the rules to the methods. unfortunately, I won't be able to do that with today's presentation because there are only two rules, and that wouldn't be fair. Most likely, most of you will be able to reverse engineer it and figure out exactly how to trade this. So it wouldn't be fair to the students we've had that have spent good money purchasing strategy number 10. But let me share with you the process to show you how simple it is. Remember, only two rules, initial rules in this strategy. The first thing we want to do is to determine how the trend is going to be, whether it's going to be an uptrend or a downtrend. Remember, we used our overall trend identifier, the buy-sell line before. But since we're not using that, we only want to find the short-term trend. We're going to use our short-term trend identifier, which is the PET-D. So that's how we're going to determine whether we're in an uptrend or a downtrend. Now, I know many of you are familiar with the PET-D. Some of you I see today, are even students of the PET-D course. But for those of you who aren't, this is the way it works. You see, traders, as we look at this older chart in the head, that will usually get in too late, and then they'll get out too late and then suffer a loss. For example, most traders would not determine that we were in an uptrend somewhere down here. They would determine by the time we made higher highs, higher lows, somewhere around here, that we're in an uptrend. And so maybe on this little pullback, you'd buy right here, and you say to yourself, wow, I have a really good trade here. This is great. I'm in an uptrend. I'm in sync with the trend the way I'm supposed to be. I have a one-day gain, a really nice profit, and so I feel really good about myself. And then this usually happens. And all of a sudden, what happened to that gain? By the next week, you've turned it into a loss, and now you most likely turned into a long-term investor because you're holding and praying that this comes back up. But once we apply our color bar tool, which is the PET-D, it automatically colors the bars, either green or red. A series of green bars will tell us we're in an uptrend. A series of red bars tells us we're in a downtrend. So we didn't have to wait up here to get long. We knew that we were in an uptrend right down here. And we didn't have to wait down here to exit or to wish and hope that we would bounce because we knew up here, after a couple of red bars, that we were in a downtrend. So in my over 4 decades of trading, as you see it says in front of you, the PET-D is the best tool I found for capturing the short-term trend. So that's why we're applying it with strategy number 10. It is the best tool I know of, and I use it on a daily basis. I was using it this morning to trade the E-mini futures. I use it on a daily basis to trade because it tells me the short-term trend. All right, so that's the first portion of the process. Now, if we're looking for buy setups, strategy number 10 identifies a shallow pullback. Now, if you're not familiar with what a pullback is, it's a 1 to 3 day pause or a sell-off in a short-term uptrend. So if the bars, the overall bars, or even just a couple of them are green, we're looking for a 1 to 3 day pause or a sell-off. That's where the setup is going to be generated. Now, conversely, let's say the bars are red. All right, let's say the PET-D is coloring the bars red. Could be just a few of them red, okay? Well, the method identifies a shallow pullback. In other words, the setup will be generated in a 1 to 3 day pause or a bounce in a short-term downtrend. In other words, the bars are red. That's how simple this is. But let me show you how powerful this is, okay? Let's look at the strategy number 10 setup process in action. Let me show you how you can apply this using our platform. Remember, we developed the platform to make it simple for you. All right, let's look at this chart here in BMCH. All right, this was in early August. Now we've had a really nice quick run up here, but many of you would go to a chat room or a trading room and someone would say, hey, listen, that stock, according to my indicators and according to my analysis, is really overbought. And in fact, what do we have here? Let's say you took that candlestick course. That's a shooting star. That's a very negative sign here, usually a reversal pattern. And then accompanied with that is a bearish engulfing pattern. So you've got two really negative candlestick patterns here. I know that the majority of traders look at candlesticks. So most likely you'll say, listen, I'm not going to buy this. In fact, I'm going to look to sell. So let's say you bought the puts, maybe you shorted the stock, and you sold right here. And you're feeling good about yourself because for one day in the trade, you've got a nice little movement to the downside. So you feel pretty happy. Well, what does the PET-D tell us? On our platform, it's as simple as just clicking on the PET-D in the green strategy tab. This is the tab where we have all of our strategies, all of our different techniques and methods. Just click on PET-D. And what is the PET-D telling you? Remember, the PET-D is the best short-term trend identifier I know of because it translates on a tick-by-tick basis what the market wants to do. It's not predicting how high or how low something will go. It doesn't, tell you exactly, the top or the bottom. It's just telling you on a tick-by-tick basis what the market wants to do. Does it want to go higher? Does it want to go lower? Since all of the bars are green, even though these last 3 bars closed lower, they're green. So they are down days in a short-term uptrend. So according to our strategy, we teach you all the rules to strategy number 10. There's only 2 rules, and you study, let's say you study the course rules, and you say, you know what? I think there's a buy signal here. So this is the beauty of the PTS Primo charting platform. It's an educational tool designed to help you to check your work. So let's say you think there's a buy signal right here, all right? After all, the bars are green. Rather than having me sit next to you 24/7 to check your work or to call me up or to send me an email, all you have to do is simply click on strategy number 10, because you don't think that's a sell signal, you think it's a buy signal somewhere. Click on strategy number 10 in the overall green strategy tab here. You'll see a drop-down menu. Click on signal arrows. This is how you're going to check your work to see if you're correct. And you are. That is a buy signal. So you're learning how to spot these and identify these valid setups on your own. For the very first time, you're taking control of your own trading destiny. You're not relying on some guy in a chat room to tell you what to do. You're not relying on the earnings reports to come out. You're not relying on the volume or the Fibonacci retracements or the institutionals telling you what they're doing. You're just making your own decisions based off what the market's telling you, based off a setup that is a high probability setup, based off what the market wants to do. That's the only thing you should be listening to, okay? So, where you were following the candlesticks before based off that class you took and thinking that you should be selling, now you have a nice little short-term gain there. Maybe you wanted to get out, maybe you're holding on to the trade, but you're doing pretty well. After all, had you sold, you would have had a loss on your hands. Now, as with all markets, we start to go into a little pausing phase. As you can see here, we have 1, 2, 3, 4 down days because they're dark bars. But what color are they? They're dark green. Remember, this does not mean that the trend has changed. This is actually saying that even though we closed lower, these are just down days in a short-term uptrend. This is the beauty of the PET D. It's telling you, most likely, if you were looking at conventional candlesticks, all those down days would be colored red. See, this is doing you a disservice because this automatically gives you the mindset that, well, we must be in a downtrend. That's a bad sign. They're colored red. But in all actuality, these are buying opportunities, provided the 2 rules are met. So let's say, once again, you study the work and you think you see some more signals being generated. So you click on strategy number 10, click on signal arrows once again to check your work, and guess what? You're right. 2 more buy signals are being generated. So whether you sold and took a quick profit or whether you're still in the first trade, maybe you want to double down and buy some more, that would have been a good idea because about a week later, look what happened, kicked in. Now, how did the market know, or I should say, how did we know the market was going to gap up like that? We didn't. Remember, we don't predict how high or how low something will go. Our only job as traders is to listen to what it wants to do and then jump on board. We don't know how high something will go. We don't know how low something will go. We have little guideposts, which I'll share with you later on in today's presentation, that work really well, but they're not predictive. They're just guideposts based on certain patterns, certain indications. So had you been lucky enough to hold on to this first position, guess what? You got a nice little 12-point gain there, not based off indicators, not based off of some chat room guy, or not based off some guy on TV, based off of your own decision, based off of how you wanted to enter, how you wanted to exit. Remember, in my 43 years of trading, the only traders I've known that are still trading are the ones that make their own decisions, not the ones that go to a trading room, not the ones that go to a blog to tell them what to do. Here's another example in DAO, okay? This was in mid-August coming into September this last week, okay? Obviously, we're in a downtrend here, okay? Stock's been heading down for a couple of weeks, but most of you would say, well, Steve, this is really oversold here. I mean, all the indicators are oversold, and that $10,000 class I took on the institutions, well, that's major support. All the institutions, all the big banks are buying here. How can I go against those guys? They're always right. And on top of that, look at this. We have a bullish engulfing pattern. I took that $5,000 candlestick class, and it told me that this is a really good reversal pattern. So I'm sorry. I know you say to listen to the market, but I've got to listen to these things because they really are supposed to work. You know, a lot of traders have been using them over time, and conventional wisdom says that I got to buy. So you step in and buy, right? Sound familiar? Do you realize how all my justification for buying was based on someone or something else, not based off the market? What is the market telling me? What is the market saying it wants to do on a tick-by-tick basis? First thing we do is apply our short-term trend identifier, the PET-D. And the PET-D translates what the market wants to do. Guess what? The last week or so has been red. Even though we had a series of up days, you see how we were up here, up here, up here, up here? What is the outline of that candle, of that bar? It's red. So this is just like having, let's say it's winter time, all right? Let's say it's the middle of January, the middle of December or January. I live on the West Coast. Every once in a while in the middle of January, we'll have a day where it's 80, 85 degrees here. It's the Santa Ana winds, right? And just because it's the middle of January and it's 85 degrees, do we all of a sudden say, hey, winter's over, it's time to go to the beach now because that's it, winter's over? No, because we know in a couple of days, it's going to be back down to 60 or 55 degrees. It's the same thing with a downtrend. Just because you have a couple of up days does not mean the downtrend is over. That's why the PET-D is telling you we are still in a downtrend. These up days are just selling opportunities. Now, since the short-term trend is down, we want to find out the rules of strategy number 10. We've studied them, and we want to see if there are any sell signals that have been generated. Now, we've studied them, and we think we've found a few. Click on strategy number 10. We know we're not going to be a buyer here. Click on strategy number 10. Click on signal arrows simply to check our work. We're not using these to blindly go in and buy or sell. We want these to check our work because we want to be able to identify things on our own. We don't want to use these signal arrows as a crutch. We first have to know how to see a strategy number 10 signal on our own. And we're right. We actually have 3 signals, okay? So where most people are saying, Steve, this is so oversold, you got to buy this, our students were selling and potentially had a 17-point gain. You see how simple it is to be in sync with the market when first you're using a short-term trend identifier, and secondly, you're making your own trading decisions. You're not wasting your time and hard-earned money searching for answers through someone else. Just listen to the market and you'll find that consistency much quicker. I know I did. Trust me, I was doing the same thing the majority of you probably did 43 years ago when I started. You would have been so surprised if you looked at my daily trading plan. We didn't have trading rooms or chat rooms then. There was no internet, but we had a lot of newsletters, which I subscribed to all of them. I looked at all the earnings reports because I was making markets in 60 stocks, so I had to know the earnings, right? I was looking at all the jobless claims, all the unemployment numbers. It was just ridiculous how many things had to line up in order for me to buy or sell. And even though I knew how all these things work, I couldn't make a dime. I was just basically treading water my first year. And I was on the floor. I thought, gosh, I have access to all this information. How come I can't make any money? My mentor said, listen, Steve, the reason why you can't make any money is because you're following things that have no consistency. It's just this conventional wisdom, it really holds no water. There's nothing in here that really works over time. Sure, every once in a while, just like the slot machines, you'll get a winner. But then you give it all back, right? And I said, exactly. They said, listen, we're going to teach you how to listen to the only thing you should be listening to, which is the chart in front of you. And it was a very difficult concept for me to grasp. In fact, in the beginning, I didn't want to. But once I finally did, that's when my trading started becoming consistent. So this is the same concept, the same idea we teach our students around the world, in over 116 countries and in every state in the United States. We teach them the same things that my mentors taught me. Now, if you missed the first couple of sell signals, don't worry. There were more generated along the way. All right, so let's look at some recent strategy number 10 signals that have been generated within the last few months, some within the last week, okay? Just to show you some more setups. Here's one in MDLA, all right? This was in mid-August, all right? Looks like the market's absolutely doing nothing, right? But if we apply the PET-D, we see the majority of bars are green. All we need is for the 2 rules to be met with a green bar. And once we apply them, we see that we have 2 buy signals here. Now, nothing much happened for a week until ultimately the stock did take off, and you could have generated a profit of 10 points in 3 weeks if you decided to stay in that long, okay? Here's an example in the spiders. This was coming into August last month. Now, someone looking at this who hasn't taken my classes would say, well, Steve, I know you say to trade and stick with the trend, but isn't this a perfect example of a downtrend? You have lower highs, right? Well, the best thing I know for determining the trend, the short-term trend, is the PET-D. So what is the PET-D telling us? It's telling us that we're in a short-term uptrend. I don't care if we're making lower highs or higher highs. It makes no difference. If the color bars are green, we're in an uptrend. The PET-D is telling us it wants to go higher. So why would I argue with the market? The PET-D actually is not telling us, it's translating that the market wants to go higher. So I'm not going to argue with the market. I don't care what some guy says in a chat room. I don't care what some jobless claims number is. The market says it wants to go higher. I'm going to jump on board. So how do I do that? I applied structure in the form of strategy number 10. And I see that there was a buy signal generated right here coming into August. Now, the market went up, the spiders went up 35 points. And that was comparable to a 2,500 Dow Jones rally. So even if you didn't trade the spiders, you could have used this signal as a directional tool for the market, a market signal. In other words, if the spider, which is the ETF that represents the S&P 500, was signaling it wanted to go higher, don't you think the market would follow suit? So then you could buy that stock you were interested in, or maybe buy those calls, because most likely the market will go higher. Now, we didn't know it was going to go up 2,500 points in the next couple of weeks, but you could have stayed in and captured that if you wanted to. Now, there was another signal generated later on you could have taken advantage of that still could have generated a positive gain. Here's an example we talked about earlier in W Day, World Day. As you can see here, it looked like we had institutional selling, right? I mean, this is the big thing. You don't want to ever go against the institutions. I've said this numerous times. When I was trading on the floor, I can tell you with stone cold honesty that the worst trading record against anyone I ever traded with were the institutions. They were consistently wrong. I would never use the institutions as someone I was going to follow. They were consistently wrong. They entered orders in my book to sell hundreds of thousands of millions of shares, and mostly they were wrong all the time. So the only thing that keeps them in business is because they have a lot of bucks behind them. But trust me, I would never base a trade off of what the institutions are doing. I would most likely want to do the opposite. But even though that's not the basis for this particular strategy, where everyone else was saying selling, we did not want to sell here, even though we may have following this particular course. The first thing we want to do, even though it went straight up, was to apply the PET-D. Now, we knew the PET-D was green the entire time, even though the institutions were saying sell. So rather than sell, we're going to look for these two rules to be met. And the requirements were met right here. That's where you could have potentially captured 55 points in 1 week. Not a bad little short-term trade, right? You could have purchased the calls, some type of spread with a bias to the upside. Remember, we're not going to tell you how to get in. We're just sharing with you these high probability setups. Here's an example in STSA. Sell signal was generated using strategy 10. All of the bars are red, so the requirements are met. And nothing much happened for the next month, okay? The month of August. Now, you could have taken a quick trade if you wanted to, maybe captured 5 points. But if you stuck in long enough, you could have potentially made 22 points. Look what happened. All of a sudden, the stock fell out of bed. You see how the market, through our translator, the PET-D, was telling us it wanted to go lower. Sure, look, it took a little longer time, but the price of the stock fell 85%, okay? Here's another example. Tesla. This was in mid-August, okay? We've all seen how tremendously Tesla has been acting, but as we saw here, where most people thought, well, maybe it's a little bit overbought, a buy signal was generated on the 19th, and the stock went up 125 points in 2 weeks. Another short-term trade here in Zoom, okay? A buy signal was generated here as well, same day. 200 points in 2 weeks, all right? Here's an example on OSTK, all right? There were multiple signals generated. Had you taken the first ones here, you could have potentially captured 37 points to the upside. But once the trend changed, there was another buy signal that was generated. Guess what? This one did not work out. Most likely you would have taken roughly about an 8-point loss, anywhere from 5 to 8 points. Let's say you took the larger loss, 8 points, okay? So rather than potentially capturing 37, you had a loss here with this 8-point loss. But this is the beauty of the strategy. When the trend changes, we change with the trend. So now that the bars are red, we look for sell signals. And there was a sell signal generated right here. So we get back on our horse, go short, and we could have potentially made 37 points. So you think we could have made back that loss? This is what we mean by consistency. We're not afraid to take losses. We know they will happen, but we're confident in knowing that we'll be able to recoup those losses. That's what a consistent method does. Now, here's an example in Apple. This happened at the end of August coming into September. There was a buy signal generated, a real nice little trade here, okay? And then look what happened. So I know a lot of you and a lot of our students, when they first start to take these courses, they say, Steve, this is great, but how do I know where to exit? Okay. Now, this is something that we teach in our course. We have upwards of 6 or 7 different exit plans for you to choose from. Remember, our job as an educator is to provide you with this information. Your job as the person who's going to make the decisions is decide for yourself which one makes you feel the most comfortable. Now, the good news is one of those methods we developed so that it could be automatically seen and with one click accessed on our platform. So let me share with you how you could have taken advantage of this. When you get a buy signal, you'll get that arrow. Once again, this is your educational arrow to check your work. All you have to do is double click on this arrow once a signal has been generated. You can do this even before you enter to the trade, and it will automatically generate 4 separate exit levels based on this one technique. Remember, there are about 7 different exit techniques we teach you. This is just one of them. Now, this technique will give you roughly about 4 different exits. If you want to get in and out and take the short-term trade, you get out here. You want to do a more moderate swing trade, you take the second or third. If you want to get the most bang for your buck, you exit at the 4th and final exit level, all right? And why are there only 4 exit levels? Because using this one technique, most of the time, although it's not a statistic, but most of the time we've seen the 4th and final exit level is usually where the trend changes. So had we used the 4th exit level here, we would have exited for a quick profit in about a week of 9 points. Someone would say, but Steve, I'm only going for 9 points. Why would I get out here? Well, look what happened, okay? This was coming into the first week, just this last week in September. Here's another example of this. Here was a sell signal in ACIW. This was in the first week of September coming into this week. All right, a nice little trade here using strategy number 10. Okay, now, had we used the exit level plan on this, all you have to do is double click this on. You'll see the 4 different levels. Had you taken the 4th final level, well, you could have gotten out with a quick 5 points in 4 days. Now, once again, someone would say, well, Steve, 5 points, not a lot, but look what happened after that. Well, would you rather taken 5 points or maybe just 1 or 2 points? Okay. Maybe if you stayed in long enough, that would have turned into a loss. Here's another example in Microsoft, okay? Buy signal generated right here in mid-August, okay? All you have to do is double click on. You'll get the 4 exit levels automatically on our platform. This is the beauty of our platform. It makes it very simple to decide whether you want to take this trade or not. And this is generated before you can even enter to the trade, all right? So you'll know exactly what your odds are, where you should exit if you decide to use this technique. Remember, if you're the type of trader that wants to get in and out quickly, you exit at the first level. If you're a swing trader or a moderate trader, you use these 2 levels. If you want to get the most bang for your buck before the trend may change, you exit at the 4th level. So let's say we use the 4th one. Well, look at this. In roughly about 4 days, we could have made 17 points in Microsoft. Not a bad little trade, right? All right, so let's see what happened. After we got out, well, we really didn't go down. The bars remained green, and in fact, we made a new closing high. This is where I get students say, hey, Steve, I want a refund. You only made me 17 points. I could have made 20, 25 points, and you got me out too quick. So you promised me that I would get out at the top. Well, first of all, we don't promise anyone that. We don't promise anything. All we do is teach you. Remember, you're making your own decisions. This is just one exit level, okay? But had you gotten out, look what you would have avoided. Now, looking back in hindsight, isn't that a good place to get out where you got out at 17-point gain? Because most likely, had you stayed in another week, any gains you would have had would have been wiped out and you would have had a very large loss. Another example here, QDEL, all right? A cluster of sell signals was generated in mid-August, all right? Nothing much happened for a week. If we had used these 4 signals, we could have entered an order to say, listen, I'm short here, up here, roughly about 230 or so. I want to cover right here. So I'll place an order to buy at 190.38. Well, look what happened. On the gap down, you would have entered right here, and you would have made 72 points in roughly 2 weeks. Not a bad little trade, right? So this is just one of the other perks by having our platform in trading strategy number 10. We not only auto-generate the buy and sell arrows, we also auto-generate one of our exiting techniques. Okay, let's recap before we go into the question and answer portion. Remember, this process uses the ATTENDEE to determine the trend. We always are in sync with the trend, whatever method we teach at Pro Trader Strategies and Specialist Trading. But this is the first where we use the short-term trend to determine all of our signals. If we have a buy signal, obviously the bars will be green, and we'll look for either a 1 to 3 day pause or a 1 to 3 day sell-off within the green bars. If the bars are red, we'll look for either a 1 to 3 day pause or a 1 to 3 day bounce within the red bars. Okay? Remember, we only have 2 rules. This is about the most information I can give to you. I'm sorry. Other than that, you're going to be able to figure out how this works. It's that simple. But you just saw how powerful it's been in this last month or so. These are all signals you could have taken if you're a member of the Strategy Number 10 course. So ask yourself, do you think this short-term strategy could help your trading for the remainder of this year? Remember, we've only got a little over 3 months left to go. Are you anywhere near where you thought you'd be in coming into October? Most likely you're not. That's okay. Most students of mine never are that close to where they want it to be. But we have turned a lot of students into consistent traders, and they're so happy they finally took the courage to step up and to educate themselves. So take advantage of this great offer we have for you today. We have a great attendee discount for all of you coming to this presentation. We're going to offer you strategy number 10. This is our entirely new short-term strategy. It applies the ATTENDEE for the short-term trend, and you have a combo of an indicator pattern-based method. You'll get all the complete course rules, the aggressive and the conservative version. Remember, the average trade lasts anywhere from 1 to 5 days. You can stretch it out longer, as you've seen, if you want. You may apply this to option trading if you want as well. And you're going to get educational correspondence, okay? This is our short-term trend trader. But we're going to step it up a notch because remember, you see how easy it is not only to trade with this, but to learn how to identify these setups and how to identify that one exit strategy or exit method on the platform. So we're going to actually throw in 12 months free. That's a full year free of the platform included with your strategy number 10 course membership. Now, included with that, you also get a lot of extra free perks. We're also going to throw in our strength of trend feature, over 90 of the most prominent technical indicators, our automatic exit levels, our personalized tech support. But here's one of the best things, the signal scanner, because you can scan for nightly strategy number 10 signals. That's the beauty of this. So you don't have to sit there and say, well, gosh, I have to look through the entire S&P 500 to find these signals. No, you can scan for them and check your work to see if you're learning how to properly identify them. For example, let me show you how simple it is. This is our scan page. Once you just load up whatever market you're interested in, currency pairs, futures, Bitcoin, commodities, European exchanges, Asian exchanges, S&P 500, NASDAQ, whatever market you're interested in, okay, just click on that, load the symbol, and then simply click on scan right here. And in about 30 seconds, you'll see a series of green or red bars. The green bars means there's a buy signal in the corresponding stock. The red bars mean there's a sell signal. Now, let's say you were a member of this course this past couple of weeks, okay? Well, you could have scanned on the 9th, there was a sell signal in CTSX, all right? After all, the bars are red and you've studied the course rules, you see that, yeah, you're right, this is a sell signal. It meets the rules from what I've learned. Maybe you wanted to take advantage of it. You bought the puts, or maybe you actually sold short the stock. Well, 10 points in 2 days. Not a bad little short-term trade, right? But let's say you wanted to stay in a little bit longer using that exit tool. Well, going back to August 14th, letter W, Wayfair, generated a buy signal, okay? And before you even got into the trade, you clicked on right here and you said, okay, well, here are the exit levels. I'm going to use this exit plan. So you decide maybe to buy the calls. Maybe you actually bought the stock. 40 points in 1 week using strategy number 10 and this particular exit level. Now, the stock really didn't go down that much, but you got out pretty close to the high, but if the bars are still green, you're saying to yourself, well, should I have gotten out? You're starting to get a little greedy here. Maybe you think maybe 40 points, you could have maybe made 50 points, 60 points. But then look what happened, okay? So do you see the value of all these tools and information I'm sharing with you? These are things that have taken me 43 years to accumulate that are just easily accessible on the platform. They're one click away. So we're giving you a full year of the PTS Primo charting platform along with this great strategy number 10 discount. So let's break it down, okay? The new strategy special price with the Pet D is $49.95, okay? It's $5,000. But we're going to cut that. We're going to discount $500, all right? 10% we're taking off for you, so it's only going to be $44.95. Now, included with that, we realize that may be too much for people to come up with in a lump sum. So we're going to give you payment plans as well. So for a small deposit, you can still be up and running and have a short-term payment plan. This is a great way to still come on board and not have to come up with $44.95. You can put down a small deposit and you can still be up and running as early as today. Remember, that still includes the Pet D. It still includes 1 year of the platform. Now, let's say you already own the Pet D. I see a lot of students here that are Pet D course members. Well, that's okay. We'll discount the price even more down to $34.95, okay? Well, let's take some more off that. We'll discount that as well. We'll discount it down to $29.95. So if you already own the Pet D, you can get the strategy number 10 course for $29.95. This, once again, includes a full year of the platform. This is a great, great offer. Sometime next year, this is a very popular class now. If you're scared about holding positions overnight, this is a class, a membership that you want to take advantage of, because most likely next year, this price will increase mainly, because it's so popular and because it can really protect you in these volatile times of the market. So don't forget, you're going to get a full year of the platform, which comes with so many other things, so many of the tools, indicators, so many other setups, as well as that scanner, okay? So lots of great stuff included with this. Here's how to take advantage of this. I developed the platform, and they're in charge of all the tech support as well as the course discounts and pricing. Contact Pro Trader Strategies. I would suggest calling them at 310-598-6677, because if you can't come up with a $44.95, that's perfectly understandable. But for a small deposit, you can still be up and running. You can still be a student of mine as early as today. Now, that link you see at the very bottom is the link that will take you to the sign-up page, and there's more information. It's not a live link, but we've posted a live link in the chat box on the far right-hand corner of the go to webinar column. So all you have to do is go to the chat box, and you'll see a live link there, okay? Now, I promise you I would reserve the last 5-10 minutes for any questions that you may have. So if you have questions, just open up your question and answer box. Type them in, and I will be happy to answer them. Oh, someone's asking, what is the handle for your Twitter page? Okay, let me. If you have a pencil and paper, you want to write that down. It is at SPCLSTTRADG. Okay, that's abbreviation for specialist trading. I'll say that again. At SPCLSTTRADG. Okay, kind of a breakup there of specialist trading. Just go there. There's a lot of great free information, different educational things I post on a daily basis. In fact, I believe there's some recent strategy number 10 trades that have just been recently set up there and posted as well. Okay. Someone's asking me, can you use this on intraday trading? Sure you can. You can use it on intraday trading, but just remember, I always tell this to my students, the smaller the time frame you go with any method, with any strategy, with any system, it doesn't matter if it's one of mine, someone else's, one of yours, you will find more noise, because that's just the nature of the markets. It's just the energy level. Anytime you go to smaller time frames, there's a lot more backing and filling, a lot more what they call noise. So, just be aware of that first. One of the things we actually require all of our members of any course is to first paper trade, okay? Just don't, do like a lot of students who they jump in too quickly, and all of a sudden a series of losses appear, and they say, Steve, what's going on here? This isn't working well. And then I ask them for their work, and I look at their displays and their chart examples, and most likely they've all entered the trade incorrectly. The rules have been not studied correctly, and they're all entering incorrectly. So please, paper trade first, and then once you become a student of mine, you can email me anytime you like. I was answering emails right before this presentation today. You can email me whenever you like with any question concerning, doubts or different ways in which to apply the method, you're not really sure if you're really properly identifying a signal or not, you can email me whenever you'd like, and I will be right there to answer your question via email. So this is also included with the course as well. Okay. Someone's asking me, does the strength of trend tool come incorporated with? Yes, the strength of trend tool is something that is a tool I developed with ProTrader Strategies. I've done webinars on it before. It's a great tool for determining if a trend is running out of steam or not. Okay. On my Twitter page, I've talked about this before, showing some signals with some stocks and futures where it has an uncanny ability to tell you many times if a stock, future, currency pair is running out of gas. This tool, which I developed with ProTrader Strategies, is yours for free on the platform. Yes, it is on there as well, so you'll get that as well, along with the scanner. Also, you have a portfolio page. You can make a list of all your stocks or whatever markets you're trading. And there's really just a ton of wealth of information and of usage on our platform. You're going to get that all included for free for 1 year, okay? Someone's asking, how do I establish a payment plan? Okay, if you're interested in just at least finding out about a payment plan, remember, there's absolutely no obligation. Contact ProTrader Strategies. You see the phone number right there, 310-598-6677. There's absolutely no obligation. They have trading consultants manning the phones right now. They would be more than happy to discuss an option for a payment plan with you, okay? And they would be happy to give you the numbers so you could put down a small deposit and still be up and running. You could be set the platform as well as the rules to the course and all the online information as early as today. But once again, you do not have to feel pressured. They're not going to pressure you into a sale. Just call them up and ask them about the payment plan. They would be more than happy to give you that information. In fact, I would really suggest you all calling up and getting information on there. They're not going to pressure you, so you can find out more information strictly about that, okay? Okay, good questions. We're about at the end of the presentation, so I just want to say in closing, thank you so much for attending. I hope you learned a little bit, and I hope you saw our sincerity to really trying to educate you, but most importantly, trying to take your trading to the next level. I know a lot of you are probably really discouraged. Excuse me. You're probably suffering right now in your trading. You're thinking, boy, I had so many hopes and dreams at the beginning of the year, and none of them seem to have panned out. Don't worry, that's very common. But I'm here to help you, hopefully, to take you to that next level. The only way you can do that is by coming on board, okay? We really just want to educate you. Remember, we're not promising you the world. We're not going to say we're going to have you retire by next year. All we're promising you is sound fundamental education. The same things that I was taught that turned my trading around. Hopefully, they will be able to turn your trading around as well, okay? As you look at one last slide of our disclaimer here, I just want to say thanks for taking time out of your Wednesday. I really wish you the best of luck, but most importantly, I look forward to all of you becoming students of mine in the Strategy Number 10 course, along with 1 full year of our platform, okay? Thank you so much for attending today. I'll see you next time. Bye-bye.